Hello and good morning, all from Shikhar Garg, your host, and welcome back to Almus Market Mornings, your daily dose of financial updates. Now, though with recent updates, it seems the feel-good days have hit some sort of snag as global markets from stocks to bond looks to be falling in a concerted cross-asset sell-off. Not just a sell-off in bonds, but there has been a seismic shift in the inflation and now looks to be the monetary policy. So, JK, what do you think of this animal called inflation? What should the financial markets be expecting?
Hello, good morning. Uh, so we had this double whammy of India and US inflation yesterday. We start with what happened with the US retail prices, which saw 1.2% month-on-month rise in March, bringing the annual rate to 8.5%, the highest ever since December 81. Expectedly, the energy prices rose 11% month on month, contributing heavily to this headline. This is evident from the month on month core inflation, which strips out the volatile food and energy costs. That came slightly lower than the expected at 0.3%. All the gauges of inflation are now staying above Fed's 2% inflation target. And the slight moderation in the month-on-month core inflation actually led to some buying in bonds and yields falling somewhat. But dollar did not have any respite. It is now well entrenched above 100, held by the weakness in euro and the Japanese yen. Yen approached the 2015 high at 125.85, but promptly saw some verbal statements from the Japanese officials leading to some profit taking. However, very few people believe there will be actual intervention, and hence we have seen yen rebound to 125 again, and later on back to 125.50. The technical trend is still quite bullish. Euro dollar has, of course, been the other casualty of dollar strength as geo-economic sentiment data came again weak, and more importantly, people are looking at whether ECB continues to drag its feet on policy moves to tackle high inflation. There is an overall belief that until we see a resolution of war in Ukraine, economic outlook for Europe is really weak, and that will keep the currency on the defensive. I expect the dollar index to move towards 101 in the coming sessions. As expected, New Zealand hiked policy rate by 0.5% today, but the currency had already discounted the same. In fact, commodity currencies are consolidating their recent gains. Chinese yuan regained some strength despite bad news on inflation alongside slow growth. Coming to Indian market, the retail inflation for March came much higher than expected at 6.95%, estimated at 6.35, and way above previous month 6.07, with food inflation at 7.47% versus 5.93%, contributing to the high number substantially. With the index yet to fully price in the recent fuel price hikes, we have the prospect of next month headline number coming even higher, and we'll also see potential pass-through of the elevated global prices to the transport sector, which could affect prices of broad spectrum of commodities. And this should be a worry for policymakers who had so far adopted a gradualist approach. With this number, we have CPI above the upper band of 2 to 6% mandated to MPC, and in all likelihood will exceed in the coming months too. We expect an earlier than expected rate hike by RBI, mostly in June meeting, to address the inflation. The bond market is expected to take this number quite negatively, with yield on 10-year paper possibly rising towards 7.3%, while rupee will be under more pressure as the real yields get even more negative. Although due to long weekend, the market may be in a mood to square up USD-INR longs due to event risks. As Indian market winds up the week early, there are many potential market moving events in the next 2 days, which we should take note of. The Canadian Central Bank meet today. Later on, Australia reports their jobs data, and a strong number could spur their action. And European Central Bank meets tomorrow amid concerns that they remain behind the curve. The time has come to break the loss of trust in ECB and the stability in the euro. Market wants action and not words. The longer ECB waits, so the steeper and more thorny the path ahead for euro. We also have a monthly retail sales number from US tomorrow to see if the higher prices have affected consumption already. Jobless claims will be interesting after last week's number came at a low last seen in 1968. And US policymakers will also be looking at the Michigan state inflation expectations quite closely. So that's it. A lot of economic news to digest and in the sessions ahead as well. Just to remind everyone that from next Monday, Forex desks at banks will start early at 9 a.m. and close at 3:30 as hitherto, as per the announcement of RBI. Have a long weekend and good long weekend. Thank you.
Okay, that's great. And yes, inflation double whammy is there. Inflation continues above the long set Fed's target of 2%, while the ECB seems to be dragging on the monetary policy front. Though their counterpart, New Zealand Central Bank, as JK mentioned, raises rates by 50 basis point, the inflation on Indian front came quite high as well. We don't know whether many of you have been noticing this or not, but ये महंगाई central bank वालों को बहुत परेशान करने वाली है. So let's see how things goes around. And on the down south, on the Sri Lankan front also, there is an entire, some worrisome update where the government has mentioned that all the outstanding payments to foreign holders will be suspended until they restructure their debt. So folks, the financial markets is having a lot of ups and downs. A lot of things are going on. Please continue to manage your risk, and we take goodbye and wish you guys have a very great long weekend. That's it. Goodbye.